Most loan officers are stuck in a trap they don't even see. You're grinding 60-hour weeks, closing deals left and right, but somehow you're still living paycheck to paycheck. I've spent over 20 years in real estate financing, acquiring over $1 billion in property, and I've seen this pattern destroy careers. The problem isn't you. It's that you're only selling one thing. And in the next 12 minutes, I'm going to show you exactly why residential loan officers stay poor and the one move that could 10x your income and build long-term wealth. Problem number one, you're a specialist in the wrong lane. Let me ask you something. When was the last time you felt completely secure about where your income is coming from next quarter? Because here's what most residential loan officers don't want to say out loud. Specialization feels like a strength until the market moves, and then it feels like a trap. Because you've spent years getting good at residential loans. You know the product, you know the process, you know how to close, but you built your entire business on one lane. And that lane is a wall at the end of it. When rates go up, when inventory dries up, your whole income stream dries up with it. Not because you did anything wrong, not because you stopped working hard, but because the business you built was never designed to survive that kind of shift. And here's what most people miss. It's not a market problem, it's a structure problem. Problem number two, you're giving away your biggest commissions. Here's one that really stings. Every time a client mentions an investment property and you say, I don't do commercial, you just gave away a $20,000 to $50,000 commission. Think about that for a second. You did all the work. You built that relationship. You earned that call. And then you handed that payday to somebody else. That's not a referral, that's a leak. And it's happening in your business every single month. The clients calling you about investment properties are often your best clients. They have money, they have motivation, they trust you. And you're sending them somewhere else. I'm going to show you exactly how to stop doing that. But first, I need you to understand the full picture of what's happening here, because it goes deeper than just one missed commission. Problem number three, you're always starting over. Here's a pattern I've seen destroy careers that should have been great. Every month is month one. New leads, new deals, new pipeline from scratch, no machine running in the background, no repeat clients coming back like clockwork. If you stop hustling, the income stops. Full stop. You're not building a business. You're buying yourself a job 1 month at a time. And the brutal part, even when you're doing everything right, you're still one slow quarter away from real financial distress because there's no floor. There's no recurring revenue. No client who calls you back every year because they trust you and they have another deal. That's not a career. That's a treadmill. And the loan officers who do figure out the pipeline problem, who grind through it and start closing deals consistently, they run straight into the next wall because making money and keeping money are two completely different things. Problem number four, high income, low wealth. This one's hard to hear, but it might be the most important thing I say in this entire video. A lot of LOs make good money, real money, and they have almost nothing to show for it. Here's why. Commission income gets taxed hard. You're at the top bracket. Then add the good months when money feels easy and lifestyle creeps in. Bigger house, fancier cars, bigger expenses, bigger spending. The income goes up and somehow the savings don't. You're building equity for your clients. You're building profit for your bank, but you're not building anything for yourself. And the worst part, you might not even realize it's happening until you've already been doing this for 10 years and you look around and you say, where did all the money go? Problem number five, the Fed controls your income. Millions of homeowners are locked in at rates of 3 and 4%. They're not moving anywhere. They can't afford to. If they sell by something newer at 6 or 7%, their payment doubles for the same house or maybe even worse. So they stay put and your pipeline freezes. You didn't do anything wrong. You just built a business where one decision by the Federal Reserve can cut your income in half. That's a really fragile place to be. And once you see it clearly, once you really understand that your entire income depends on a committee of people you've never met making a decision you have no control over, you can't unsee that. Most loan officers see this and they think, I just need to work harder. And that's exactly the wrong answer. Working harder in a broken structure doesn't fix the structure. But the Fed isn't the only thing killing your pipeline. Because even when a strong client walks through the door, someone with income, assets, and a deal worth closing, residential underwriting has its own way of saying no. Problem number six, your best clients can't qualify. The economy is shifting. More people are self-employed, freelance, business owners. These are often your highest earning clients. Smart people, real money, but they can't pass residential underwriting. Their tax returns don't show enough income. The bench says no, so you lose the deal and they go elsewhere. The clients who trust you the most, the ones with the most money, are the ones you can't even help. Not because you don't want to, but because the money you're selling wasn't built for them. Now listen, I didn't figure this out because I'm smarter than anybody else in the industry. I figured it out because I got frustrated enough to go looking for a different answer. After years of watching brokers with deals that fell through the cracks and good commissions walk out the door, I started asking a different question. Not how to close more deals, But what would it look like if none of these problems ever existed? And when I found that answer, it was simpler than I expected. Now, here's the part nobody tells you. Every single one of these problems has a fix, and the fix is the same in every case. Add commercial real estate to what you do. I know what you're thinking. That's a completely different world. I don't know commercial. It's complicated. I don't have time. And I get it. But that's exactly what I thought before I understood how it actually works. Let me show you what happens when you flip each of these problems on its head. What happens when the Fed raises rates? Commercial investors get more active. Residential buyers freeze when rates go up. They care about monthly payments. Commercial investors think completely differently. They care about cash flow, about NOI, about tax strategy, about buying when others are running scared. When the residential market slows down, smart investors start looking for deals. Bridge loans still come due, refinances still need to happen, capital needs to move. Commercial doesn't stop, it just shifts, and you can be there for it. Next, giving away your commissions, that has to stop. You have clients right now who own investment properties, or they want to. And one commercial deal, a $2, $5, or $10 million deal at one point, that's $20 or $50 or $100,000 fee on one deal. That's the same as closing 5 to 10 residential loans. You already have the relationships, you did the work. You just need to stop setting that business elsewhere. The number one reason residential brokers fail when they try commercial is simple. They don't have a system. Without one, they close a deal here and there, but they never actually build a commercial real estate business. So what does it mean to have a system? What does the right system look like? 3 things, and you need all 3. First, you need automation. The commercial financing process has to run efficiently enough that you have both the time and the bandwidth to work both commercial and residential. Second, you need specific knowledge. You know residential, but investment properties play by different rules. You need the specific expertise to qualify, structure, and present rental deals with confidence. Third, you need live mentoring on your actual deals. Someone you can talk to, someone to rely on who's been there. Not theory, but real support in real time when a real deal is on the line. All 3 of these things have to work together. One without the others won't get you there. And by the way, we've solved all this for you by giving you access to our platform, our Mortgage OS. Not a sales pitch. It's the system I wish I had 20 years ago when I started. The link is below in the description. But let's keep going, because we've got a couple more issues to resolve. Appraisal kills the deal, right? Not in commercial. In residential, one low appraisal and the deal is dead. The borrower has no backup, no plan B. Commercial is different. Commercial lending is based on cash flow, what the property earns, not just what it's worth on paper. And commercial borrowers are more sophisticated. They calculate ROI, they have partners, they can restructure. If the numbers come in light, there's always another way to look at the deal. You stop losing deals to things outside of your control. Another problem, self-employed clients who can't qualify. Commercial says yes. Commercial loans don't care as much about your personal tax returns because commercial mortgages are non-recourse to the borrower. They look at the property's income, the property's bank statements, and they look at the profits. That client that your residential bank just turned down, they may be a perfect commercial borrower. You stop losing your best clients to underwriting rules that weren't built for them. Next one, stop starting over every month. Commercial clients are repeat clients. A professional investor does 2 to 5 deals a year, maybe even more, every year. You close one deal with them and you have a client for life. They come back, they send referrals, they bring you into their next deal before they even call anybody else. You stop hunting and you start farming. And over time, as those repeat commissions stack up, you build the wealth to stop just financing other people's deals and start owning them yourself. That's how you go from high income to real wealth and real freedom. Here's what I want you to think about for a second. Everything we just covered, the income that resets every month, the commissions walking out the door, the Fed cutting your pipeline in half, none of that is going away on its own. The residential market isn't going to fix itself. The underwriting rules aren't going to bend for your best clients, even if you ask really nicely. And the rate cycle isn't going to stop. But there's one more layer to this that most people still don't see coming. And it's bigger than everything we just talked about. The technical work that fills most of a residential LO's week is being automated. Not someday, but right now. And the brokers who built their entire value about doing that work manually are going to feel it before they even understand what hit them. The only real estate isn't working harder at what you already do. It's moving into the work that AI can't commoditize. The doing it before everyone else figures that out. That's exactly what this next video is about. It walks you through the pivot you need to make, what it looks like, why it works, and how to actually make it. And if you're ready to build your business today, we built a mortgage operating system to help you do it. Not another AI bot or an agent, not a CRM or an LOS or a marketplace, an actual operating system that automates commercial real estate financing end to end in a way none of those tools were ever built to do. The link is in the description below. And if you're a broker or an LO trying to figure out what winning actually looks like right now, go ahead and subscribe, because that's the one question I'm building this entire video channel around. See you in the next one.